Hi guys and welcome back to the channel. So in today's video I will create an expert advisor that will be based on the moving average indicator and the envelopes. So as you can see I have both of these indicators on my chart already. So now I will try to explain basically the idea behind the expert advisor. Okay, so the idea that I have in mind is pretty simple. Simple. So first of all, I will have to spot a clear trend, meaning I don't want to trade sideways trends. So for example, I don't want to trade something like this. Yeah, what I want to be focused on is clear trends to either one of the sides. So either this nice uptrend or a downtrend, for example, like this. Okay, so that's basically step one. And the step two is that when I spot one of the trends, so let's go back here, what I want to wait for is for the price to going below the lower envelope band and then basically going back above that lower envelope level. Okay, so we can see the perfect example at this point right here. So if we look at the chart, we can clearly see that both the price and the envelopes are above the moving average, which can mean that there's an uptrend. Yeah, so that's basically the trend part. And then our second step is to wait for the price to go below and above the lower envelope level, which happens right at this point. So let me just highlight basically what we will be waiting for. Okay, and then when this happens, I want to open a buy position and hopefully the price will go up. So that's pretty simple. On the other side, so let's go back here for our sell trend. So this is our sell trend. Okay, so clearly the price goes below or is below the moving average, and so is the envelope, and therefore I will be waiting for the price to break above the higher envelope level and then going below that higher envelope level. And this exact thing basically happens at this point, for example. Yeah, so this is basically the first example, or at this point. Okay, this is pretty extreme, but yeah, it's based on our rules, so I'm okay with that as well. Or at this point or at this point. Okay, so I think from what you could have seen so far, like it's safe to say that first of all we will have a lot of positions, okay, because as you can see it's pretty common for the price to go above and below, and we'll also have a lot of false signals. Okay, so for example in this case the price goes above, below, and then it continues to go up. And the same thing basically happens, for example, in this case. Okay, so above, below. This is questionable, but yeah, let's go above, below. So this is sell position here, price goes up. Okay, so we will have a lot of false signals as well. So what can filter these fake signals basically is changing the settings of the envelopes. Okay, so if you are familiar with the envelopes indicator, you know that the initial settings are 14 and deviation 0.1, which is very, very, very tight. Okay, so when I basically apply these initial settings, let's say, you can see that we have a lot of signals. So what I will do is that I will choose some different values, and since I can say what values are the best ones, I will keep it basically dynamic, and then I will optimize it inside the strategy tester. Okay, so I hope everything's clear so far, and now I think it's time to or to switch to my MT5 IDE and start with the coding part of this video. Okay, so let's do it. So this is my MT5 IDE. I will go to my experts folder inside my YouTube folder and create a new file. So it's going to be an expert advisor template. So let's click on next and let's call this moving average envelope EA. Yeah, so clear and simple. And then it will require some parameters. I think I can define these parameters in here because yeah, it's not difficult. So let's add the first parameter or the first input, and the first input will be for the moving average period. Okay, so input MA period, which will have type of an integer, so this is okay, and initial values for the moving average can be, I don't know, 150 for example. So let's do that. So let's add the second input and the third input. Okay, so these two inputs will be for the envelopes indicator. So input E and V, and now period. Okay, because if you remember correctly, the envelope indicator requires two arguments. Okay, so the first is period, which is 14, and the second one, sorry, let me correct this. Okay, and the second argument for the envelopes is, okay, why can I name it? So input envelopes deviation. Okay, so that was the second argument the indicator requires, and by default it's set to 0.1, but as we could have seen, the 0.1 isn't a good option at all. So I will set the initial value to 0.3. So basically the gap between the higher and lower envelope will be wider. So let's click on next. We won't be needing any of these functions, so let's click on next. And we also don't need these functions, so click on finish, and this is what we will be working with. So let me just change the font size to 18 so it's nice and visible, and let's continue. Okay, so yeah, so what do I have to do now? So of course I have to import or include the trade class. Then I have to create variables for the ask price and bid price, and then I have to also create handles for the moving average indicator and the envelopes indicator, and then assign the indicators to the handles on init function. So let's do all of this. So first of all, include trade/trade.mqh. Let's create an instance, so ctrade. Now let's create variables for the ask and bid price, so double ask bid price. And now let's create handles, so integer handle MA handle envelope. Perfect. So now compile, everything's okay. So now on init function, I will do simply handle MA is equal to IMA for the current symbol, current period, moving average period is equal to the input moving average period, shift is equal to 0. Now modes. Okay, so I think we can go with exponential moving average. Like it shouldn't, or let's go with the simple one. Yeah, simple moving average, and price is based on the closing price. Perfect. So now let's do the same for the envelope. So handle envelope is equal to I envelopes for the symbol period current moving average period will be equal to input envelopes period, shift is 0, mode, let's also do simple moving average, price close, and deviation is equal to the input envelopes deviation. Perfect, so far so good. So now let's go here. Let's delete on the init function since I won't be using it. Let's also delete these comments here, and this here, and I can do it for the rest of the code as well. I will leave this comment with the input parameters. Okay, so on tick function, so first of all, yeah, sorry, I'll just have a sip of my coffee. Yeah, so on tick function, what I have to start with is to create an arrays inside of them I will get the indicator values, and then I can work with the indicator values and I can generate some signals. So that's what I will do. So or if you have seen any other videos on this channel, you know that I like to get the indicator values only once per every new candlestick. Okay, I think doing it on every tick is waste of time, and then when you have various complex projects, for example, and you work with a lot of indicators, it can really slow down the EA. So what I will do is that I will just create static integer last bar is equal to 0, integer bars is equal to I bars for the current symbol, current period, and I will say, so if last bar is not equal to the bars, meaning I haven't done anything on a new bar, or there was a new bar and I haven't done anything since then, I will update the last bar to the bars, and I will get my indicator values. Okay, so this is where I will work with the copy buffer functions. So now on the global scope I will create two arrays, so MA array and three arrays because I will be working with three values basically. If we check the chart, one value is for the moving average, second value is for the lower envelope band, and the third value is for the higher envelopes band. Okay, so let's create an array for each of these. So moving average array, higher envelope array, and lower envelope array. Perfect. So now let's use the copy buffer function. So indicator handle is equal to handle moving average. Buffer number is 0. Starting position is 1. Count is 1. Double array MA array. Okay, so the reason why I am using starting position of 1 instead of 0 is that I don't want to get any false signals, let's say. Okay, because values at position 1 basically 0 basically mean the most recent values on the current candlestick basically. But since the candlestick will change, yeah, so the candlestick will change, so will the indicator. Yeah, and because of this, if I input here 0, I won't get precise values for the indicator, or I will get values that will change during the candlestick, therefore it won't be valid. So that's why I always go one candlestick back. So I look at the most recent completed candlestick and I get the indicator values for that specific one. Okay, so let's do the copy buffer function for the rest. So handle envelope. So now buffer number is 0. I think 0 is for the higher envelope, or it is in the Bollinger Bands. 1 is for higher, 2 is for lower. So I guess number 0 should be for the higher with the envelopes, but we will see. So starting position is also 1, and count. In this case, I will need two values because I want to check basically the crossover of the price and the envelope. So I need two values to check the recent value and the previous value. And I will store this into higher envelopes array. So now let's just copy this, paste it here. Everything's the same, but I'll just change the buffer number to 1. Therefore, this is for the lower band. And I will change the array to lower envelopes array right here. So far, so good. Okay, so now I can start working on my signals, I guess. So if you remember at the start of the video, I said that the first step is to declare the trend. Okay, so what we want to avoid is sideways trend. Therefore, I have to think of a way of basically how to determine whether the price is going up or down. So there are multiple ways to do this, basically, but I'm thinking, or I want to use something very simple, because this shouldn't be the main focus of this video, if you know what I mean. So let me just think for a bit, and hopefully I will come up with something. Okay, so I guess what we can do is say, like if we check the sideways market, for example, well, it's very difficult to do something. Let me change the moving average to 100 just so it copies the more recent. Yeah. So what I can do is that I can check basically the slope. You know what? Let's start just by saying that if the price and if the envelope is either above or below the moving average, that is enough for us. Okay, so for example, in this case, you can see that the moving average is here, the price is here, the lower envelope is here, price nor the lower band of the envelope touches the moving average. Therefore, this is an uptrend. Yeah. So for example, in this case, you can see that the price touches the moving average and the envelopes as well. Therefore, this is a sideways trend. The same thing here, for example. It's not ideal, I know. There will be a lot of false signals, but let's start with something and then I can think of something more sophisticated. Okay, so let's do this. So first of all, we need to get the... First of all, I will create variables for the price. Okay, so let's go close 1, which will be equal to close symbol period shift 1, close 2, which will be equal to I close symbol period 2, and now I will copy this and paste it here 3 more times because I want to get this type of information for the opening price as well. So let me just change this to open, and I open, and the rest stays the same. And this is for the high price, and this is for the low price. Okay, because I will need this later. So high 1, high 2, and this should be low 1 and low 2. Perfect. So now let's get the trend. So I will create this integer variable called trend, and let's do something here. So you know what, let me also create variables for those indicator values so it's easier to work with them. Or yeah, okay, so let's do MA is equal to MA array at position 0. Higher envelope 1 is equal to higher envelope array at position 0. So this is basically the most recent value we have. H envelope 2 will be equal to higher envelope array at position 0. So this is the prior value. So let's just copy this, paste it here, and let's change to lower envelope, lower, so lower envelope array 1 and 0. Okay, so now like when I use these values, it will be much simpler than typing all of this. Okay, and like for me it doesn't make a difference, but I hope it will be more clear code. Okay, so now integer trend, and let's say, so if MA, so now we have to check whether the price basically touches the moving average. So that's the first thing. So, or we don't, because sorry, forget what I just said. Let's do this. So if low 1 is higher than moving average and lower envelope 1 is higher than moving average, meaning that the low price, so for example this price here is above the moving average and the lower envelope at this point is as well, which it is, meaning that none of these two values basically touch the moving average, then the trend is 1, meaning uptrend. If this is not the case, then we will check. So if high 1 is lower than moving average and H envelope 1 is lower than moving average, then the trend is negative 1, meaning downtrend. And if this is not the case, then it's safe to say that there's a sideways trend, which will be equal to 0. Perfect. So now let's do this. So if trend is equal to 1, and so this is us checking the uptrend, and now we have to check basically the this crossover between the price and the moving and the lower envelope. So we want to check closing price. So, and close 2 is below the low L envelope 2 and close 1 is above the L envelope 1. We have open buy position. So we have our signal and we want to open a buy position. So we will do that later. And now let's do the same thing for the sell side. So if trend is equal to -1 and close 2 is higher than high envelopes 2 and close 1 is below H envelope 1, open sell trade. So let's do this. So I forgot one thing, and that is to get the most recent ask and bid prices, or ask and bid price data. So ask is equal to symbol info double for the current symbol ask, and bid is equal to symbol info double current symbol bid price. Perfect. So now we can open these positions. So trade, buy, volume, let's not worry about that for now. Symbol, price is ask price, stop loss. I think we should declare, or we should create an input for the take profit and stop loss points, and also for the volume in the input section. So let's do that. So input double take profit points, which will equal to 500, input double stop loss points, which will be equal to 500 as well, and input double volume, which will be equal to 0.1. So now let's go back here and let's replace these values with these inputs. So stop loss is ask minus the stop loss points times point. Take profit is ask plus take profit points times point, and we don't have to specify a comment here. It's not useful in any way to us. So now the same thing for the sell side, we just change the ask to bid, and stop loss is above the opening price and take profit is below the opening price, and everything can stay the same. Okay, so I guess this should be it. Like, there are some things we could improve, and maybe I will. But now this should be basically the first version of this EA, so let's check it. So MA envelope EA, so let's go here, let's open the tester, strategy tester, let's go here, single, so let's just find my YouTube folder, and this is moving average envelope EA. So yeah, so sorry, this was just one of my prior optimizations. So visual mode, and yeah, I guess let's check it. So I'll just slow down this projection and let's see what will happen. Okay, so at this point it tells us open a sell position, which is correct based on the rules the EA has from us. So if we check it, the price doesn't touch the moving average. The higher envelope at this point also doesn't touch the moving average, so this is correct, but it goes against us. So the first position is a losing position, which is okay. Yeah, which is okay. So then nothing happens here, and you can see by me setting the envelopes to deviation of 0.3, like the gap is very, very wide, and therefore we don't have a lot of positions, okay, because yeah, there like has to be a very extreme swing when there's a trend, and so far this is not that common. But you can see that it does a very good job with the sideways market. Okay, so this is a sideways market, and it can't open any positions because the price is inside, or the moving average is inside the envelopes, let's say. So this is something that I like to see. So it does a good job with the sideways market. So now hopefully here we will get some position we want. Okay, so let's speed this up a bit just to see if we will open any positions at all. So this is our this is our next position. So sell position, this seems correct because yeah, the envelope is below the moving average, so is the price. Here open sell position and it goes into profit, which is nice. Okay, so this seems really nice. Okay, so in this case buy position, which is correct, but it goes into a loss. Okay, so we can see that it works how it should. Okay, so based on the rules it has from us, or from me, it does a very good job. And it doesn't seem to be profitable in this stage, but that's okay because we can do a lot more with this EA. So let me think about this. So first thing I would say is that this EA is mean reverting, or not mean reverting, but it not mean reverting, but trend reverting, let's say. So it waits like for a trend, then it waits for a pullback in the opposite direction. So if we are in a sell trend, for example, here, the price has to go above, okay, so up as it did at this point, and then we are waiting for a pullback into the original trend. So then we hope that this is just like lower high, and then the price will continue to go down, which doesn't happen in this case, but I think the concept of it is pretty solid, because this is what should happen sometimes. Not every time, of course, but sometimes. So the second thing, or what I could also do is that I could basically trade the break of the higher and lower envelope. So for buy positions, we can see that when the trend is very, very aggressive, the price goes above the higher envelope, for example, here. And maybe it would make much more sense to trade these kinds of breakouts of the higher and lower envelope than waiting for the price to go below and then retracing back, because here we can like catch the original movement, which might be more profitable and more stable. So what do you think? Should I implement this here, or is this retracement concept enough? Let me optimize the retracement first of all. Okay, so we can do a lot of things here. So first of all, I will optimize the period of the trend moving average. So 25 increment of 20, and let's do 400 input envelopes period. I think the envelope period doesn't affect trading that much. I think the deviation does, but just yeah, it's optimization. We can do a lot of things here. So let's do from 4 increment of 4 to 40. So now this will be interesting. So let's start at the initial value of 0.1. Let's increase by 0.05, and let's do something like 0.6. Let's try this. Take profit points, stop loss points. This also can dramatically increase or decrease the profitability of the EA. So let's start with 100 points on each of the sides. Increment of 50 is okay with me, and let's do, I don't know, 600. Oh, 1000 might be more. Like, I think putting 1000 to take profit side doesn't make sense, but to stop loss it might make sense. So let's just do this, and let's increase the stop loss by 75 points. So this should be okay. And we are optimizing on GBP USD over the last 4 years, 15-minute time frame. So let's check the optimization results. Okay, this is not bad. This is not bad at all. Well, this is very good. To be honest, I didn't expect this, because like if I sort, okay, so on this plot right here, which basically shows you the optimization results, there's a lot of red color, which means that it's not good. Okay, but there are some combinations of the settings that seem to work pretty nice. So for example, this one, if I run the test, it looks like this. Wow, which is really, really good. Let me just, yeah. So like, this is a nice backtest. This is a nice backtest. And like, when you are developing expert advisors, you can be focused, like when you are developing them. So in the development stage, you can be focused on setting the right indicator values straight away, or like when you start with the development, don't worry about the indicator values, because then you can optimize it. And you can see that when I developed this EA, I just gave it some random initial values which weren't profitable, but then thanks to the optimization process, I can make it profitable. Yeah, so just an advice for you. This seems nice. This seems really, really nice. Let's do the same backtest, but for the last 10 years, sorry, or 9 years. Because when I, for example, want to check if the EA's concept is okay, what I want to see is that it can perform over the last 10 years, for example, only with take profit and stop loss, because it's very simple, like to add the trailing stop features or the break-even features or the time filters that will make the EA profitable. But I want to see if the EA can be profitable to some degree only with take profit and stop loss. And it seems like this is not bad. Like, it's funny because this is very simple concept, but to be honest with you, this might be one of the best EAs we had here so far. Because yeah, you can see that this is literally like the code, and this is the logic here. So it's extremely simple, but you can see that also simple ideas can be profitable. So now, as you can see, we started to get worse settings or worse results with the settings. So I stopped the backtest. So let's check it. So the most profitable setting is this one. Profit factor of 1.3, total trades 770, low drawdown, expected payoff pretty nice. So let's check it. And this is how it looks like. Yeah, this is not bad. Like, if the backtest over the last 10 years looks like this, you know that the EA has potential. Yeah, you know that it does. And yeah, if this was like my personal EA, I would spend much more time on this. You can see that, for example, in this case, it opens a lot of positions around the same price level, which isn't something we want to have, which is probably something like this on the optimization plot or the backtest plot. So yeah, so there are ways of how I would improve this EA, and these improvements would improve the profitability as well. Okay, so this is it. So let's try optimize for Euro USD. Okay, so let's do the same thing over the last 10 years or 9 years. Let's see if it can perform on the other markets as well. Because the other thing I always test with my EAs is that if the concept can be profitable on more symbols. Because yeah, if it's only profitable on one symbol, like, it doesn't mean that it's bad, but you have to be much more aware of the risk that that particular concept has, basically. Sorry. Okay, because if your EA does perform only on one symbol well, for example, then it's safe to say that the concept behind the EA is not very solid. Because if it were solid, it would perform with the right settings on almost every symbol. So you can see that this is much worse than for the GBP USD. But it can be profitable as well. So if we like check the profitability, this is the most profitable setting, but with very low profit factor, which I don't like. There are more, or the settings with the higher profit factor have a very low number of positions, so 72. So this is also not something I like to see. So for example, it's safe to say that for Euro USD, this is not profitable. So now what I will do is that I will change the concept or the entry method of this EA, not to a pullback, but to the follow-up of the trend. Okay, so now for the buy positions, I will try to, or I will open positions when basically the price goes above the higher band, and for the sell positions, I will open positions when the price goes below the lower band. Okay, so now I will try to catch the trend as soon as possible. So let's do that. So it will be pretty simple. What I have to do is that I like the trend part stays the same, because I have to check the trend part, and now I just say, so if close number 1 is lower than high envelope number 1, and close number 2 is below the H, so high envelope number 2, and close envelope is higher than this. And here I can just change these to lower envelope number 1 and lower envelope number 2. So 2 and 1, and the rest should stay the same. So let's just try this. So now what I will do is that I will revert this to the default settings. I will open the visual mode and I will just check whether it is correct or not. And if it's correct, I will optimize it later. Okay, so far it's correct, because like at this stage it does go below, but as you can see we are in a sideways trend because the higher envelope is like, or the moving average is inside the envelope, so that's okay. And and here basically we get our first sell position. So there's clear sell trade or downtrend, and here it closes below the lower envelope, and this is correct. Perfect. This is correct, and this should basically allow us to catch these trends very, very nicely. So let's just check a few more positions here and let's see how it plays off. So I want to see some trades to the upside as well, which can be seen right here. It's the same issue as I talked about before. Like, we are opening a lot of positions around the same price level, which is not nice, but yeah, it's good enough for now, let's say. Yeah. So just be aware of that. I hope you can see the backtest, because I know that there's a webcam of me somewhere here. So I'll just shift this here. Okay, so let's analyze this. This is correct sell position. So I am happy with this. And let's wait for the one last trade to open, and then I can optimize this. Okay, so 2 buy positions, they are correct because it's based on our rules. So let's do it. So now I will optimize this in the same way. Okay, so I'm not changing anything, and let's see firstly on GBP/USD, because the prior version was profitable on GBP/USD. So let's just see if this version can be also profitable. Okay, so let's wait. Well, it doesn't look bad. Like, okay, so this is the best return. It doesn't look that bad. I think the previous concept with that pullback will be more profitable for the GBP/USD, but it doesn't mean that this is not profitable at all. Like, you can see that if I sort this by the profit factor, we have some nice profit factors, but with very low number of trades. But when I sort this by the profit, it doesn't look that nice. So let's just wait for a while here. The usual thing, basically, when it comes down to trend EAs, is that it doesn't profit very often, but when it does, it makes huge profit. So basically, it takes a lot of time for a strong trend to establish, but once it's established, you can make huge profits out of it. So let's check it. So these are the best settings, or the best results we have. So I don't like this, to be honest with you, because it's the same thing. We either have very nice profit factor but with low number of positions, or we have bad profit factor but with high number of positions. What I want to see is that the EA can produce nice profit factor. Nice profit factor can be something like 1.2 and higher. It also should produce a lot of positions and nice profit. So GBPUSD, no. So for GBPUSD, the prior version was performing much better. So now let's try EURUSD, because if you remember, the prior version didn't perform on EURUSD well. So let's see if changing the rules a bit can increase the profitability on EURUSD. Yeah, and also let me check how long this video is. So it's 45 minutes. Okay, so this is the last backtest or optimization. And then I think it's enough for today. Okay, so far it seems a little bit better than the prior version on EURUSD. You can see that, for example, this is what I was talking about. So it's nice profit factor, higher than 1.2, a lot of positions, which is also nice, and nice profit. Okay, so yeah, so this is, for example, one setting that I like. And here you can see that we got to a part or a phase where we only get worse and worse results. So I will stop this and let's check it. So sort by the highest profit. So this is the highest profit, but the profit factor is extremely low. This is second highest profit with nice profit factor, but low number of positions. So I will start, okay, let's try this. Okay, so here you can see, yeah, the number of positions is very low. So let's try, for example, this one. Yeah, so nice profit factor, nice number of positions, nice profit. So this is something I would prefer, okay? You can see that basically it's not that steady as, for example, the previous backtest, but it can perform, I guess, because yeah, it has a high number of positions and it's profitable. So I guess this is for today's video. It's been pretty long, so sorry for that, but I think it was informative and fun to some extent to see basically how such simple concept as using moving average envelopes and price pullback can lead to somewhat profitable returns in the right market and under the right conditions. So yeah, I thank you for your time and I will see you in the next video. Bye.